Here's the thing about DeFi in India that most people don't realize until it's too late. If you've been earning tokens from liquidity mining, staking rewards, play to earn games, or even just browsing with Brave, you're probably making a massive tax mistake without even knowing it. The income tax department is paying attention, and while there isn't a specific DeFi rulebook yet, that doesn't mean your crypto income exists in some magical tax-free zone. In fact, the current system could be taxing you twice on the same tokens, and I'm going to show you exactly how this works and what you need to do about it. Let me paint you a picture of what's actually happening here. Under India's virtual digital asset provisions, every single token that lands in your wallet is considered taxable income at its fair market value at the timestamp you receive it. So if you earned 100 governance tokens worth 50 rupees each through a DeFi protocol, that's 5,000 rupees of taxable income right there. Now, here's where it gets interesting. If you're just earning occasionally from platforms like Brave or Uniswap, this income gets taxed at your regular slab rate under income from other sources. But if you're a full-time DeFi professional, maybe you're consulting, gaming regularly, or actively farming across multiple protocols, your earnings might actually fall under income from business or profession, which opens up possibilities for certain business deductions. This applies whether you got those tokens from yield farming, referral bonuses, gaming rewards, or any other DeFi activity. The moment they hit your wallet, the tax clock starts ticking. But here's where it gets really interesting. And by interesting, I mean potentially expensive. When you eventually sell, swap, spend those tokens, or even dispose of NFTs, you're hit with a second tax event. Under Section 115 BBH, any profit from that disposal gets taxed at a flat 30% rate plus a 4% cess on top. There's no distinction between short-term and long-term gains like there is with traditional investments. So using our earlier example, if those tokens you earned at 50 rupees each are now worth 80 rupees when you sell them, that 3,000 rupee profit gets taxed at 30%, costing you 900 rupees plus 36 rupees in cess. And here's the kicker. If you lost money on another crypto trade, you can't offset that loss against this gain. The tax system doesn't allow set-offs for crypto losses. But here's the catch that most people don't realize. While centralized exchanges automatically deduct this TDS, the majority of DeFi platforms, staking protocols, and decentralized exchanges don't cut any TDS at all because they're completely decentralized. This means you're responsible for calculating and paying this TDS manually, which is where most people get completely lost. But here's what most people miss. If your transaction is below 10,000 rupees, like in our example where someone sold tokens worth 8,000 rupees, no TDS applies. However, if you're actively trading larger amounts across different wallets and blockchains, this creates a paperwork nightmare that most people aren't prepared for. The Central Board of Direct Taxes is already sending notices to people based on exchange data linked to their PAN cards. So this isn't some theoretical future problem. It's happening right now. The reality is that most DeFi users are completely overwhelmed by this complexity. And I don't blame them. Tracking every transaction, calculating fair market values, categorizing different types of income, and maintaining compliant records across multiple protocols and chains is practically impossible to do manually. This is exactly why we built Koinx to solve this problem. Our platform automatically integrates with your wallets, classifies transactions, and calculates both income and capital gains taxes using real-time market values. We generate ITR-ready reports that comply with Indian tax regulations, which means you can either file directly or hand everything over to your chartered accountant with complete confidence. Beyond just tax calculations, Koinx gives you accurate previews of your capital gains even before you make transactions, whether you're selling tokens or NFTs, so you can plan your moves strategically throughout the financial year. We also provide comprehensive portfolio insights that show your total holdings, gains, and pending tax liabilities across all protocols and token types. And if your DeFi activity spans high volumes or complex protocols, we connect you directly with crypto tax professionals who can guide you through ITR filing, help with slab-based categorization, and interpret any confusing entries in your reports. The bottom line is this: DeFi taxation in India isn't going away, and pretending it doesn't exist is a strategy that's guaranteed to backfire. Every token you earn or spend could trigger a taxable event. But with Koinx, staying compliant doesn't have to consume your life. If you're serious about your crypto journey, especially if you're deep into DeFi protocols, using our platform isn't just smart. It's essential for your financial well-being and peace of mind.